Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I've got Kirk Chisholm, Principal of Innovative Advisory Group on the show. Kirk, welcome to the show.
Thanks for having me on, Michael.
All right, my pleasure. Kirk, you work in the self-directed IRA arena, but you're far more sophisticated than that broad statement. Let's get into what you do and the difference from the kind of people you work with between how you handle them on the IRAs and the self-directed.
Sure. Yeah. So we're a comprehensive wealth management firm. We work with a wide range of clients. Our real niche, what we're really known for, is alternative assets held inside of retirement accounts. It's something that most people in the industry are not aware of. I'd say there's maybe no more than 10% of the population is even aware that this can be done. There's about 4% that's actually investing in alternatives inside of retirement accounts. So it's a very kind of niche focus, but we find that some of the best investments come from people who are creative, right? They might be an expert in some area, whether it's real estate or private equity or just private company stock, horses, could be anything. But, people who have some expertise and want to be creative with that in their retirement accounts, that's something that we really shine with.
So I heard private equity as an alternative investment through an IRA. Can you give us some more examples of, say, some of the more creative alternative investments that people are able to use through IRAs that they may not have known about prior to this conversation with us?
So real estate is by far the most common. Yeah. That's what everybody knows. So that's the most common. Second most common is usually private company stock. A lot of people want to start up a business and they want to use their retirement account for startup capital, which can have some benefits there. One of the most recent ones, which is interesting, is cryptocurrency. And we've gotten a huge influx of people looking to buy different cryptocurrencies inside their retirement account. That is something we can do. Interestingly enough, it's new, so there's a lot of nuances there. It's not a simple setup, but it's something that we've gotten a lot of interest in. We've done things from tax liens, payday and title loans, horses, fishing rights. Equipment lending. Like we've seen it run the gamut. Really, the only things you cannot invest in are life insurance and collectibles, but virtually anything else you can invest in. So it really makes it interesting for people who are thinking outside the box and want to, figure out some really nuanced ways to enhance the returns with the retirement accounts.
That's why you're on the show, because you have a disruptive process that encompasses things that are leading edge right now in regards to an old dog has new tricks, if you will. Let me move forward. One of the other parts about IRAs is being able to find, say, the best custodian for their self-directed IRA, and there's got to be some insights you can bring to the table on that.
Yeah, and I appreciate you bringing that up. That's actually one of the more challenging parts about the process. So much so that we've developed a few resources to be able to address that for people. So there are over 47 companies that provide custody for alternatives inside of retirement accounts. And not all those companies are, let's just say, companies I would use, but there are 47 that advertise out there that I've seen. And there are a number of things to consider when you're choosing a custodian, that they're not set up like a traditional discount broker, like a Schwab, TD, Fidelity. They're all charging you $5 a trade. I believe that's what it is right now. So that's pretty much unified, right? You're getting the same charges. So the fees are really inconsequential when it comes to picking one of those companies. With a custodian, the fees are wide ranging. And the reason being is that each of these custodians has different specialties. So if you're investing in a single asset, a certain fee structure might benefit you versus if you're investing in 15 different assets a month. So some people might, let's say, flip real estate frequently, or they might buy and sell private loans or whatever it might be. But people who are doing that might want something that's a little bit less transactional focused. But if you're buying one asset and you're sitting on it, then having a transaction-based fee might be more cost-effective. So there's a wide range of these different custodians, and they all have their niche and their focus. For example, real estate being the most common asset, there are actually custodians who will not hold real estate. They've got other niches that they focus on. So fees are a big part of this, and it's really figuring out based on what your expectations are and what you're doing is how you can keep those costs low. Another consideration is the expertise. So as I mentioned, real estate, some of them don't hold real estate. Some of them don't hold cryptocurrencies. There's a wide range of what they'll accept and what they won't accept. So even though the IRS has rules for what is allowed, the custodians can implement additional rules on top of that and say, we won't allow this because we don't want to do it for various reasons. Some of them are compliance reasons, some of them are logistical. But if you go to a discount broker, some of the three I mentioned, and you say, hey, I want to buy a horse in my IRA, first they'll probably tell you, you can't do that. And then if you press them, they'll probably say, well, we can't do that. So it's not a question of whether it's allowed, it's a question of whether they want to handle it. Now, those companies are really, really good at securities-based transactions because that's how they're set up. But if you ask them to buy a horse in an IRA, they're not going to know what to do. They could probably do it if you're a big enough customer, but do you really want them to do it if they're just figuring it out? So I look at it as I want to go with somebody who really understands the market, who's really good at these type of transactions, and I would go with that person. Customer service is another consideration. A number of these custodians get complaints for poor customer service. I don't know if it's necessarily one versus the other, but it's an obvious issue if you're trying to do a transaction and nobody gets back to you, or they mess up the paperwork or whatever it is. We actually have a number of resources on our website that talk about all the different questions you should ask a custodian before you use them. Because it's such a new process to most people, we want to make sure that everybody has the right tools to be able to figure this out for themselves.
I want to get into the cryptocurrencies for just a second. We have a lot of people that are in blockchain and cryptocurrencies, where they either own exchanges or they're coming out with their own currency. And that's very enlightening to know that people can use their IRAs for purchasing of cryptocurrencies. I imagine that's a pretty small field of custodians that work in that range or in that area, is it?
It is smaller than many other assets, in part because it's new and they don't understand the process yet. So if you think about it, I think there was one company that is offering this service and they're charging people 10% up front. Now, I don't know how you can get away with that, but if you're the only company doing it, I guess you can gouge people. I think that's kind of a bit absurd.
What do you think the rate should be?
It should be just like any other asset. It shouldn't be any different. Now, there are additional liabilities that come into play. So you think about it, you have to buy the cryptocurrency, you're going to store it in a cold storage wallet. Who's going to hold the wallet? And then if they do hold the wallet, what happens if they lose it or they mess it up? They're liable. So there are a lot of new issues that are coming up that weren't issues before in other assets like real estate, which has, a registry of deeds. You always know where that's held. It doesn't matter, whether you lose your documents, they're registered in the public registry. So there are issues with cryptocurrencies that are unfamiliar to many of these companies. Some of them are trying to form up partnerships and reduce the liability of custodying these assets. There are different ways to do it, but that's just one example of why not all of them will do this.
That is a huge niche. If you're able to cross that barrier, we have hundreds of people that we know that would love to be able to work with somebody using their IRAs in their cryptocurrencies and trade with that, both on both sides, the buy and the sell side. But let me move on. I don't want to get bogged down just on cryptocurrencies. You have some information you'd like to give to the audience about some of the common mistakes or pitfalls that people need to be aware of in this industry sector.
Yeah, I mean, there are definitely some common mistakes in this area. I mean, one of them is just like we talked about, picking the right custodian. I mean, that's challenging in of itself because most people don't know where to go, and as I mentioned, we've created some resources to basically help people do that. But some of the other challenges are what we see a lot is people don't realize that they should be keeping the assets in their retirement account. So what they'll do is they'll take a distribution and invest that money into the asset, but they'll have taken a distribution, so it doesn't actually get the benefit. So the real benefit is the retirement account, whether it's an IRA or 401k, the asset needs to be held in there. So for instance, as an example, if you're buying real estate, the real estate is titled in the name of the IRA, not your name. And the assets from the IRA go to the seller. So effectively, you're exchanging, and the real estate is owned by the IRA. Prohibited transaction is another issue. So prohibited transaction is something that causes a lot of people grief. If you're buying a stock in your IRA, you're probably never going to come into contact with this, because even though the rules are the same, most people, because of the way the securities industry has set up, it makes it really kind of, I don't want to say idiot-proof, but it makes it really, really hard to screw up, because the custodians won't allow you to do it. They've structured it in a way so that doesn't happen.
That brings up one more question I wanted to go into on this with you. The other industry sector that we're seeing a massive growth with is the cannabis industry, whether it's CBD oil or something else of that nature. If people wanted to invest, say, private equity in that industry sector, is that something that could present a problem through custodians? Because I know it. There's different people say yes, and different people say no, absolutely not.
So it's a really interesting question. There's not an issue with investing in cannabis companies. The issue is whether it is allowed through the regulators. So it's actually an issue we're exploring because somebody's asking us about it. And I'll give you an example. Like, you'd think we had a guy who wanted to invest in fertilizer or chicken poop, and come to find out that it was on a watch list for making explosives with Department of Defense. So technically, we couldn't invest in it because it was on a prohibited list. That was news to us. But as we go through the process, we do really heavy due diligence on the whole process to make sure that it's being done properly, because we are fiduciaries, so we are liable to make sure it's done right. So there is we do really in-depth stuff with this. But when it comes down to stuff like that, I haven't dug into it whether it is allowed, because we're just starting that process. I would guess it's potentially an issue because of the cash issue that really the federal government has laid on the cannabis industry. So I don't know for certain at this point, but that is something that we probably know shortly.
Yeah, I think that's going to be another niche that being in the forefront of that one is definitely going to be it. We happened to interview the first female-owned cannabis company that's publicly traded. So when you start moving in those directions, you are going to be in the catbird seat, having the niche of being able to handle alternative investments, crypto, cannabis, and things of that nature that come forward. But again, let me move forward with this. I want to ask you this: why aren't more wealth managers doing what you're doing for their clients?
The easy answer is it's hard.
Yeah.
In our industry is very streamlined and in many ways commoditized. So many of us are the same. If you go from one advisor to another, how do you know the difference? They all use the same titles. They all use the same designations. There's no way to know the difference. And from our perspective, we look at it as we're doing something that is not scalable. Other advisors aren't going to be doing this because it's not a huge market. It's not like, hey, there's $100 trillion going into alternatives. This is a kind of a niche market that you can't just click a button and buy a mutual fund. This is something that you have to understand the process inside and out. And I think there are a handful of companies that actually do this, but they don't advertise. You'll never find them. They do it for existing clients only. But there's a big learning curve. This is not something you just kind of pick up the Internal Revenue Code and say, okay, I understand it. There's a lot of cross regulations that affect this, and a lot of case law that you have to understand. So it's something that took me a while initially to get up to speed, but once I did, it's better. And I think we're very innovative in our approach to things. We think outside the box, and this is one example of this, in that we're looking for ways that our clients can actually invest ways in a tax efficient manner. And we're always looking, even outside of retirement accounts, we're always looking for different ways to do that. I mean, take the economic opportunity zones tax law that just kind of came into being, which is a great opportunity for people to do something similar. So we're always looking for ways to help people and save on taxes, and and really kind of shelter it or defer it if at all possible.
Great. Thank you for that answer. That's marvelous. I'm glad that you've been a guest on our show today. Is there anything else that you think that we should know before we part ways today?
No, I mean, you did a really good job at hitting on the main points. I will mention for people who may not have an alternative in mind, we do have a list of alternative investments that you can look at, and have this kind of like a free report for the show. But I think there's 75 alternative investment ideas that different people have used that you can kind of consider. And we don't sell products, but I think it's just a good idea generation for people to kind of like think through that process.
There is one question I think I left on the table, and I didn't get a chance to ask you, but I want to do this before we close. You also work with ultra high net worth individuals. That can require talent, not a cookie cutter. And I wanted to give the audience a chance to get a feel for you in that area. Yeah,
I appreciate you mentioning that. So we're a very different firm from most. Sure, we're an RIA, so we're fee only. We're fiduciaries. We're not associated with broker-dealer. We're looking out for our clients' best interests, but more importantly, we're not really focused on the numbers as a primary thing. We're focusing on how we can make our clients' lives better. And in many cases, that involves, numbers and trying to save on taxes and, find elaborate strategies to help our clients. But in many ways, it also impacts them in other areas of their life that they haven't even thought of. So for an example, we have a lot of clients approaching retirement. And most people think of retirement and say, oh, well, great, I can just sit in the hammock and drink beers, or I could go golfing all day. But the reality is it's a much deeper issue. We're talking about things like, what am I going to do in my retirement? Once you retire, you lose your sense of purpose. And in many ways, we have to reinvigorate that sense of purpose with our clients to make sure that they're able to live long, healthy lives with that purpose, because that purpose actually will help them with their longevity. And there's a lot of science behind that, but we're really looking at the deeper picture with our clients and seeing how we can make their lives better. And that's just kind of one example.
Kirk, thanks for being a guest on today's show.
Sure. Thanks for having me on.
You're welcome. All right, you've been watching CEO Money with Michael Yorba. Thanks for joining us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.